All right, welcome everyone. We're very excited to have another one of our world famous, well, I don't know about world famous, but locally it's pretty famous, virtual home buyer seminar. This is an excellent opportunity to take advantage of technology so that you can get your questions answered on the home buying process without ever leaving the comfort of your home or office. We are going to bring a lot of information your way. I hope you have something to write on and something to write with because the information is going to come fast and furious. Let me go ahead and start with a simple introduction. My name is Tony Martinez, and I will be co-presenting today's program along with my good friend Karlene Masse of Benchmark Mortgage. We have split this up into two parts, the real estate portion of it and the financing portion of it. And they both work extremely well together because we don't have a choice. The reality of it is that the bulk of individuals that are going to buy are going to need financing. It's a great situation when you have plenty of cash to do it. And if you're in that position, you're exceptionally blessed. But most of us are going to need a little help. And that's where the banks and the mortgage companies come in. And because it's such a complicated process, we want to make sure that you go in with your eyes open. So a little bit about myself and Xtreme International Realty, which is, again, a co-host. I am the broker of Xtreme International Realty. We have 6 locations so far. You see them on the screen there. We are growing. We're excited about what we're able to accomplish and helping both our customers and our agents accomplish their real estate and career goals. And we have grown significantly since we started now 8 years ago, and we're up to nearly 200 sales associates. So you're here today because you were invited by one of my awesome professional sales associates, and they're excited about developing a working relationship with you to help you achieve your real estate goals. The only thing I ask of you is make sure that you contact them directly to go ahead and get all of your questions answered after the class. And if you're ready to get started and you're ready to find out if you are in a position to buy right now, then you want to make sure that that's the individual that you contact immediately, and they're going to help you every single step of the way. Now, here's what we're going to teach you today: the benefits of home ownership versus renting. Let's discuss the state of the real estate market because that is a question I am asked almost every single day. Where do you start? I mean, it is a complicated process. So what are the first 2 or 3 steps that you need to take to begin the process of becoming a homeowner in 2021? Now, you're going to need some help, and that's where selecting a realtor is so critical. Well, a lot of individuals, and I don't blame them, they don't understand the difference between a sales associate, a licensed sales associate, and an actual realtor. And what does that realtor do? What makes them special, and how they aid you in the process. So I want to touch on that briefly. And then we're going to segue into the financing portion of it. And honestly, that's going to be the most important part. And that's the one where people have the most questions is, can I buy? And if I can't, how much can I buy? And we're going to be very, very straightforward with you. We don't want to mislead anyone. There's going to be some of you that are in a position to buy right now. Everything is lined up, everything is in place. But there are going to be some of you that maybe aren't quite ready to go right now, but that's okay. We can work with you to develop a plan to get you into that home of your dreams in the coming months. It is a process, and we always want people to remain optimistic and work toward their goals. Now, let's talk about the value of home ownership versus renting. I just think it's hands down. There's so many benefits to owning. Well, let's look at it this way. Building equity. In case you're not familiar with what equity is, whatever you owe on your house versus what the property is worth, that difference, that's the equity. And real estate traditionally has been the type of investment that appreciates. Now, I'm very conservative when I teach these classes because there's an abundance of real estate professionals out there that aren't shy about overstating the market and talking about how, oh, if you buy a house today, it's going to be worth so much in so much time. We hope it would appreciate, we expect it to appreciate. Real estate has traditionally grown in value, but there's never any guarantees. But I don't think there's a safer place to put one's money than real estate. And here's the thing, it's kind of like forced savings. When you pay your landlord your rent payment every month, you're helping to contribute to their financial stability, their financial wealth. I have nothing against that. We need landlords. Without landlords, we wouldn't have shelter for a lot of people. But the reality is, in some respects, in many respects, if you were to open up your window and take your cash and throw it out the window, that's kind of like what renting is. There's just no financial value to you whatsoever. There are significant tax advantages to owning real estate because when you own your own residence, the interest that you pay on that loan is tax deductible. That means it reduces the amount that you're taxed on. Now, I'm not claiming to be a tax professional, but that's just common sense. In fact, when your income starts to grow and you're paying more and more taxes, and you sit down with your tax professional and you say, man, what could I do? What can I do to pay less in taxes? The very first thing that they're going to bring up is, well, you need to buy a house. You need to buy a home. Look, when you make payments on a mortgage, your first few years of making that mortgage payment, the overwhelming majority is interest. That's just the way it is. You're paying interest on that loan, and that is a tax deduction. So it can go ahead and realize a savings to you in that area. You get to decide what lifestyle you want to lead. For example, people that love living by the water, people that love to live by the beach, people that like equestrian properties. These are the decisions you get to make because this is where we spend so much of our lives in. And if you're the person that says, you know what, I've been there, I've done that, I've owned a home, I've cut my grass, I never want to see a lawnmower ever again, then you can say, well, the lifestyle that I want to transition to is something that's low maintenance. So I want to go into some kind of a condo or some kind of a townhouse situation. These are all benefits that you get by stepping up and making that decision. What about living debt free? Can you imagine that? Can you imagine being able to own your home outright? You know that it's been done. Trust me, it's been done. Now, our generations do it less and less, but the older generations, they really look forward to the day where their home was paid in full and their castle was theirs. And that's still very achievable in today's environment. Most of us, when we get our initial first loan, we gravitate toward a 30-year mortgage, which is customary, and the payments are a little bit lower than a shorter mortgage period. And that's what people need to qualify. But do you know that more and more people are now getting 15-year mortgages? If you're able to qualify either initially for a 15-year mortgage or down the road refinance into a 15-year mortgage, do you understand the tens to hundreds of thousands of dollars in interest that you are going to save? And imagine owning your home outright in 15 years. That's wealth building. In fact, that's generational wealth building. Because when you leave that property, when our time comes to go, and we're leaving that property to our heirs, our kids, our grandkids, you're leaving them something of value, something that can help them with their financial situation, as opposed to leaving them with more debt, right? And last but not least is the pride of ownership. You can't put a price on this. You absolutely cannot put a price on this. Look, I'm blessed to be an immigrant. My parents came over from Cuba in 1966. And I know that the first time we got to buy our home, and I remember the feeling that we had. I even contributed 20 whole dollars of my savings toward that. And back then, that was actually worth a lot more. But it was like a family thing that we were doing, and we felt like, wow, we had achieved that American dream. We had arrived. We own a piece of the United States of America. And there's just something about owning your own home that it's an amazing experience. It's just such an amazing experience. And we want every single person that has that desire to accomplish that. Now, let's transition to the state of the market, because I think it's important that you understand what's going on in today's real estate market. So let's break it down this way. Are we into a seller's or buyer's market? I'm asked that question all the time. In fact, if I were to go ahead and open it up to discussion, I'm not, but if we were to open it up to discussion, I think the answers would be mixed, right? A lot of folks would say, well, yeah, we're definitely in a seller's market. Or some would say we're definitely in a buyer's market. My simple answer is I think that we're in both. And here's why. When you are buying, you're buying based on what you can afford. And if you are starting off and this is your first home, your starter home, you're probably looking at an FHA mortgage, okay, more than likely. Karlene explained that in a lot more detail, but you're probably going to look within a price range that's exceptionally hot, okay? And that means that there's more demand that there is supply. So there isn't a whole lot of inventory right now in the price range that most people are buying in, up to 420, 450, that range right there. Market is just smoking hot. The properties are only on the market a few days, maybe a few hours. In those situations, it is clearly a seller's market, which means the sellers have all the leverage. The sellers have, for lack of a better term, all the power. We have 100 showings per property. They have 20 and 30 offers. And we say this so that our buyers, the ones that we're going to represent, come in intelligently positioned to try to do the best to get their offer accepted. You don't come in and say, I want you to do this, seller, and I want you to do that. And, oh, you're listed for $399. I want you to take $380. No, that's ridiculous. That's not going to work, because they'll just tell you, go away, because they have people there that are paying not just list price. In fact, the most common thing we see right now is people pay above list price. That's how hot the market is. Now, when you start to go into the upper echelon, right? When you start to get up there in price, there's fewer buyers, right? The pool of buyers gets smaller. We had one of our agents that did an amazing sale this past week, 3.8 million. 3.8 million. Now, do you think there's a lot of buyers walking around out there ready, willing, and able to spend $3.8 million? No. So those are situations where the buyers have a lot more leverage and they can demand more from the sellers, right? People are asking all the time, what impact has COVID, the pandemic, had on real estate? Well, shockingly enough, it's made real estate even hotter. When the lockdowns first happened in March, April of last year, we were nervous. We were scared. We thought, wow, this is going to be over. Real estate's done. It's the exact opposite. People have been buying like crazy. I know. And look, that's even taking into consideration the number of people that lost their jobs, lost their incomes, could not qualify. But you know what's driving this market more than anything else? It's the historically low interest rates. When somebody comes to me and says, Tony, why would I buy right now? And says, we may never, ever see these interest rates ever again. It's amazing. For what you pay in rent right now, you can probably pay the same or less in a mortgage. Imagine that, paying less for something you would own than for something you're renting right now. We've also seen a demand from people needing to step up. They had a 2-bedroom, they had a 3-bedroom. Well, they now need 3 and 4 bedrooms. You know why? They're working from home. The kids are attending school from home. All of a sudden, that 2 bedroom with only one living area, it's not enough. So these are factors that are also contributing to the demand, and that's fueling the prices we're seeing right now. And this is the number one question that I'm constantly asked. Where are prices headed? Now, you have to understand, I do not have a crystal ball. If I did, I'd be doing something else. If I did, I'd be picking the lotto numbers. Okay? The situation is as follows. We are still seeing appreciation in real estate. We are seeing appreciation. Prices are still going up. And what's happening is it's kind of like the FOMO, FOMO, fear of missing out. Fear of missing out is driving a lot of buyers right now. They're like, they don't want to miss out on these incredible interest rates, right? And they don't want to miss out on an opportunity to buy a property right now, which can potentially be continuing to grow in price in the months and years to come. All these are converging into one of the hottest markets, if not the hottest market we've ever seen. Does that mean that the prices will always continue to go up? No, it doesn't. Be leery, be very careful of any real estate agent that will tell you when you buy real estate, you're guaranteed that the prices are going to go up. No one can say that. No one can do that. Can we look at history and say, wow, if there's ever been an investment, excuse me, that traditionally appreciates and holds its value, being real estate? Absolutely. But you will never hear me or any of my team members say you are guaranteed equity in that property. That would be unethical, unprofessional. But between me and you and the fence post, real estate is awesome. You know, what was that saying? You buy real estate because God's not making more of it. You know, we have a set amount of land, right? And that's where the demand and everything is right now. Now, let's talk about the different types of properties that an experienced, skilled realtor would be showing you. When the time comes to actually go look at properties, you're going to see what is called regular sales. But you also should have access to seeing properties that might be under what is called a short sale, or a property that might be what is called an REO. Let me explain the three, and then I'll show you an illustration. A regular sale is what we've done since the beginning of time, right? Somebody bought the house for a certain amount. They owe far less or less than what they can sell it for. When they sell it, they get to keep the difference. See, that's the intent, right? That's the plan. I buy it today for $300,000. I make payments on it for 10 years. In the future, I get to sell it for hopefully significantly more, and I keep the difference after my expenses. That's a regular sale. But you know what is also crept up? And this really hit back in 2008 when we had the Great Recession, where a lot of people, their property value went under what they owed. So they could not afford the properties anymore. They needed to sell, but there wasn't enough equity in the property. So what they did, hopefully, were engage the services of a professional that can help them to do what is called a short sale, which is essentially going to the bank or banks and asking them to accept less than the money that is owed so that the property could be sold. We are going to see an increase in the inventory of short sales in the coming months because so many people have lost their jobs. So many people are no longer able to afford their mortgages. So they will have to sell, and either they will have equity and it will be a regular sale, or they won't have equity and it will be a short sale. Last but not least, REO, which stands for real estate owned. This is an unfortunate segment. This is where someone failed to make their payments, were foreclosed on by the bank, and eventually the bank took the property back. So they lost the home. The bank will eventually put the property back on the market as an REO. Now, the challenge here is that the typical real estate agent out there only understands how to do regular sales. That's all they know. They have no idea what a short sale is, how to work it, even less an REO. So what happens is in an already tight inventory environment, they're not showing you the entire inventory. How is that fair to you? If the market already has so little to show you, so little inventory, how is it fair for your real estate agent, out of their fear, their own lack of competency, to not show you everything that was available? And this is why I plead that you work with one of my team members, because how I'm training you is how I train them every single day. And they will show you the entire inventory. Let me give you a little exercise that's going to help you when the time comes for you to go out there and look at properties, for you to understand how the market works and how the market works in terms of property values, so that you can make an offer that will actually have a chance of being accepted, okay? Let's say it's a Monday on Main Street and a home goes, the very first house on that street goes up for sale, and the agent did a great job of pricing it. It's a regular sale, so they priced it at $350. $350. I'll take it. 350,000. Okay, that's going to go to market, and that's a regular sale, and the typical real estate agent will focus on selling that one. Now, here's where I want you to really pay attention. What would happen if the very next day, on Tuesday, the house immediately next door, identical in every single way, you can see it, to the regular sale, goes on the market, but it's an REO? We just talked about that, right? Where do you think that would be priced? I want you to think about that for a second. Now, Wednesday comes around, an amazing week. The third house goes on the market identical to the other two, and this one is a short sale. Where do you think that would be priced? Now, we don't have time to open this up to discussion, but I will tell you, I have done this exercise more times than I can count. And agents, real estate agents with years of experience, will get this wrong. They'll get it wrong. You know why? They'll say, oh, that foreclosure, that REO, well, that's got to be 275. Oh, this short sale? Oh, well, that's going to be maybe 325. You know what they did? They made a common mistake. They focused on the label. They focused on the label REO, the focus on the label short sale. And I gave you the answer because I gave you an amazing hint. The minute I said this one is identical to this one, and this one is identical to these two, well, guess what? The banks, they want what it's worth. If it's truly identical, they want market price for that property. Now, in the real world, there's probably going to be significant differences, right? Maybe the property isn't maintained, maybe it has issues, and those issues will be priced into the ultimate price that it goes for. But I just wanted to show you this knowledge you now have puts you so far ahead of the game of other buyers out there. Because if you really wanted a chance to buy a home, you want an agent that will show you all three. And if you really want a chance to get in your offer accepted, you're going to know not to come in and lowball, insulting the seller, and never having a chance to get your offer accepted. When you ask yourself this question, are you ready to buy? Then it comes down to really, I'm ready, I'm willing, but am I able? Right? That's critical. And that's where money comes in. Are you paying cash? It's a no-brainer. But most of us are going to need financing, right? And so Darlene will get more into this, but there's several factors involved. One of the most important things besides your credit is, can you show a steady income source? How long have you been employed? Do you pay your bills on time? How much long-term debt do you have? And do you have enough for your down payment and closing costs? This is critical to get answered immediately. That's why before my agents can even start to show you what's available, we have to find out what you're able to buy. And then at that point, we're going to sit down with our preferred lender, and the three of us, meaning the real estate professional, you as the buyer, and Benchmark Mortgage, will sit down, and between the two of us, we're going to determine what your wants are, what your needs are, and what you're able to buy. It's kind of like DNA. We need to kind of get your DNA, but it's not going to involve any swabbing. We're going to want your desires, what you desire. I desired to be 6'2". It didn't work out. Okay. Then it's your needs. Yeah, I really want a 4-bedroom, 3-bath with a pool and a jacuzzi and a lake and a tiki and all those things. Okay. I get it. That's what you want. But do you really need all those things right now? Can we really just get you into your first starter home so you can begin the process of building that equity and getting your steps to the next one? That's when we transition to what do you really need? And then your ability. Your ability has to match your needs, right? Our agents are going to sit down and go over everything. Is it important what area you live in because of schools, close to work, all of these things that you need? Are we looking at a price point that's going to mean condo or townhouse only? Are you able to afford, qualify for a single family? Is a single family even what you want at this point in time? These are all the things that are going to be determined, and write this down, the buyer consultation. All of my professionals are trained to have a buyer consultation with you so that we get to know you, we get to understand what your DNA is, and we can match you up with the right program, right? Now, selecting a realtor, let's quickly touch on this, all right? Right now, there's several 100,000 real estate licensees in Florida. I could throw a rock into a gathering. I don't even know if you could have more than 10 or more, but let's say it's under 10 right now and there's a gathering. If that rock lands on someone, it'll probably somebody with a real estate license. Everybody has a real estate license. You all probably have a friend or a family member that has a real estate license. Well, you know what? Just because they're licensed doesn't mean they're active. Just because they're licensed doesn't mean they're productive. Just because they're licensed doesn't mean they're working. And just because they're licensed doesn't mean that they're a realtor. They are not necessarily having to adhere to a code of ethics. You want to work with someone that understands the market, that has access to the most inventory. A realtor is going to have access to the MLS so they can show you exactly what's available. It is a complicated process, so they have to be able to guide you through the contracts and disclosures and addendums. We work hand in hand with our lender to explain the financing options. Where we truly earn our money is in becoming a negotiator on your behalf to try to get you the best price and terms. And we work together as a team, because it takes a team, it takes a village to put these deals together and get them to conclusion. How about this? You get the benefit of having a professional realtor working on your behalf, and 99.9% of the time, it's not going to cost you any money to hire them because the agent is paid from the seller side. So why would you say no to an opportunity to have the best representation and the money is not even coming out of your pocket? Is the home buying process complicated? Well, you tell me. A lot of folks think that buying a home is as simple as just writing an offer, but there's an interview. We got to get you pre-approved. We got to look at houses. We got to go see them. Once you see them, is it going to be virtual? Is it going to be live? Then we got to write up offers, and you know how many offers are we going to have to write up? They're going to maybe counter, then counter to the counter. Then we may have to have addendums along the way. Well, then we go from contract to closing. There are deposits, there are inspections, there are appraisals, there's title that needs to be verified, right? There's liens that need to be verified. Yes, real estate agents do much more than drive Mercedes and cash checks. And all along the way, there's the potential for landmines and pitfalls. Where we truly earn our money is not getting you under contract. That's hard enough. It's getting you from contract to closing. Now, can you work with several realtors at one time? Great question. The best analogy I've come up with is to marriage. Okay, I don't have video on right now, but if I were to see you guys, how many of you guys were married? I would say a few hands would go up. All right. Now, those of you that are married, are you still dating other people? Okay. Because last time I checked, you only get to pick one. See, it's called relationships. It's called loyalty. And that's what a true real estate professional is seeking. They're seeking to prove to you that they're the only person you need and they can help you with every single step of the way. So we ask you for loyalty, and in exchange, you get everything they got. I think that's a fair trade. Now, before I turn it over to Karlene, I am so excited that several months ago we introduced a program that some of you may qualify for. When the pandemic started, we wanted to thank those first responders, true heroes that are on the front lines, serving our communities with something more tangible than just thank you, thank you. Okay. So we enacted our Extreme Heroes program. So if you come under any of the categories, if you're an active school, a teacher, educator, medical professional, first responder, active military, or veteran, you're going to save a lot of money because we have an amazing rebate program that's going to give you money back that could be used toward your closing costs and even your down payment. So you're definitely going to want to ask the individual that invited you on this call about this program, but there are some terms, there are some restrictions. We want to make sure that everyone's on the same page, and it's only for those that qualify under the heroes category. So what I'm going to do now is take a look at the chat area to see if there's any questions. I don't think so. All right, look at that. We're up to 66 people on the call. This is amazing. All right, so now what we're going to do is transition over to the mortgage side. As I mentioned before, this is more important than what I just talked about. I was just the opening act for the main event right now. Now, as a real estate office, we have lenders that call us every single day. It's amazing. There's, again, throw a rock, it's going to land on someone that does mortgages, but they're not all created equally. And it takes a lot for someone to earn the right to be called a preferred lender at Xtreme. And Benchmark Mortgage, in particular, the Tokar team, has consistently, time after time, year after year, demonstrated that they're the best at what they do. So I am thrilled, excited, honored to introduce Karlene Masse so that she can walk you through the steps involved in getting financing. And this is where you're probably going to ask a lot of questions. What I'm going to do once I turn over the host to her, I'm going to start monitoring the chat room to answer any questions you have on the real estate side. And then, of course, you're going to go ahead and ask any mortgage related questions that Karlene will get to either do. I think what Karlene wants to do is wait until the very end. You just post your questions into the chat. She'll go through her presentation, her PowerPoint, and at the very end, we'll look at everything that's in the chat room and answer all of your questions. Karlene, it's your show.
Thank you so much, Tony. I appreciate it. I'll make sure to slide over that tip of that introduction like I always do every quarter. But I really do appreciate it. Good morning, everyone. My name is Karlene Masse. I am with Benchmark Mortgage. I am the business development manager for the Tokar team, but I am also a bilingual loan officer. So I've helped facilitate with any loan applicants or borrowers who do need Spanish. I help facilitate them. I actually do have the privilege of having one of my team members on the call, Ralph Masse. He is my production partner. So yes, to Tony's point, I don't know if you guys will see him on there. So he will actually also help in facilitating, answering any questions along the way. Please make sure to just, type them in the chat. And as I'm going along, if you feel that I haven't touched on something that you want a little bit more information on, by all means, please type it in and we'll answer them accordingly. I also put on the chat my information so that we could have a more in-depth conversation after today. I really want to go over as many talking points that you may have because so many people have questions when it comes to the home financing portion of it. And I want to be able to really help identify your case, your financial picture. Not everyone's finances are the same. And so, what I want you to do right now is really look at this as an opportunity for a clean slate for you. You're probably walking into this process with a lot of different opinions and experiences that other people have had in the last 12, 18 months. And I want you to just kind of forget all those wonderful voices in your heads and just really just focus on where you are at today as far as your credit, your income, your assets. It's really important to do that along the way because, again, to Tony's point, and he's a wonderful speaker and he's been doing this for so many years. So you guys are in great hands with all of whichever Xtreme agent that you're working with today. But to his point, you're going to, it's a stressful approval process. Home financing is probably going to be the biggest investment that you're going to do. And we're here to make it as stress less as possible, but you also have to make sure that you don't go crazy mentally. So this is why you're on this call. You want to make sure that you're handling the right points. So I'm going to go ahead and start sharing my screen. A little bit about Tokar Team and Benchmark Mortgage. We have been around since 1999. We are a national direct lender. So with that, what that means is that we work collectively with about 30 to 40 different banks to help find the best interest rate and mortgage product for you. Being a direct lender, we handle the process from beginning to end. We have a dedicated team of about 15 people within loan officers and production partners that will help you from the minute your pre-approval begins all the way to up to contract and through your closing. After about 3 weeks after your closing, your loan will then get transferred over to the bank that we lock the interest rate with, and they will begin to service your loan throughout the life or the remaining terms of it. Okay. One of the biggest things with Benchmark is that we believe in core values, and we really take these core values not just from a team standpoint but from a customer service standpoint. We want to make sure that we provide to you the success that you need in order to get from one process from the beginning to end. We also want to develop relationships. Like Tony said, you're going to be in a marriage with your agent. You're also going to be in a marriage with your lender. And we're really I like to consider myself as your financial doctor. I want to know everything, the good, the bad, and the ugly, because the more that you tell us up front, the more that we peel apart that onion from the very beginning, the less headaches and obstacles will occur once you start working toward looking for a home. We want to always have a positive attitude. Again, this could be a very stressful situation, a very stressful process with documentations and perhaps adding co-borrowers and co-applicants. But we want to make sure that we're always happy, we're positive, that we're giving you guys the best solutions out there, and that we're really there for you because, believe it or not, even though we're lenders, we've also gone through this process ourselves. So we can understand firsthand what you're going to be going through. Our commitments to you are very simple. We want to make sure that you and your family are the most important part of this loan. It doesn't matter how high or big a loan amount is, or if you're looking to buy a loan that's, a condo that's 50,000 or a home that's $1 million, dollars. We want to make sure that you guys are our number one priority, because ultimately, if you're happy and you're satisfied with our commitment to you and the way that we handle your loan approval process, you're going to go ahead and remember us the next time you need to do your second home or refinance, or you have a family member who's ready to buy. We do offer what is called the total cost transparency. I joke around with all of my potential leads when I speak to them, and I tell them I like to sleep at night. I have a 9-month-old and I have a 7-year-old at home, and that 9-month-old doesn't let me sleep a lot. So the last thing I want to do is lose sleep over not being honest to our clients. And we offer a full transparency from the very beginning, which is why we want to know everything that we need to know when it comes to your financial platform. We're going to make sure that we are honest. If it's something that needs to, if it's something that needs to be worked on, whether it's credit, your income, your assets right now, we're going to go ahead and set out a game plan for you. Okay. It doesn't necessarily mean because you can't purchase today, that doesn't mean that you're not going to be able to purchase 6 months from now. One of my very first clients that I ever had when I started in this business, it took 2.5 years to close a loan for her. And it's not because of anything more that she wanted a specific home in a specific community, but we also had a couple of things that we needed to work on with her credit. And there were things that took her time, but you know what? Our team is here. We're dedicated. We want to make sure that we don't lose you. It's not a no, it's a not right now, and we're going to keep going. We always wanted to, and that's full circle back to our plan to succeed for you. We want to have a very detailed and thought out plan for you because we want to make sure that you are working towards your goal. Okay. So it's always great. A lot of people ask me from the very beginning, does it make sense to, you know, do a pre-approval analysis if we're not ready right now, if we're going to buy 6 months from now? And I always say yes, because you want to make sure how much how much do you need to have saved? Where do you need your credit to be? If you want a specific loan product, what are the steps that you need to do to make sure that when you are ready 6 months down the road, you're ready to go, you're ready to pull the trigger, you're ready to go and start shopping. We're going to review the best option for you. Again, I said it, not everyone's financial platform is the same. So we're going to look at everything collectively and very thorough from the very beginning. We are not your push button, here's your pre-approval mortgage. No, we do a very concise analysis from the very beginning. We verify your documents. You do your credit application, and we want to make sure that everything matches. It's our checks and balances systems. Once we offer and have all of your documentation and we're able to verify, then we'll be able to provide you with different options, and you get to choose what is the best available program for you and your family. Okay. I say this a lot. Just because you qualify for a home at $500,000 doesn't mean you want to make that monthly payment, right? So we work backwards. We proactively communicate updates for you. It's all about communication when it comes to your loan approval process. So what we're going to do is from the very beginning of your pre-approval process to the very end, we have systems in line and softwares in lines to keep you up to date with what's going on throughout your loan approval process. But the beauty is that we're also able within those systems to update your agents. So everyone's on the same page collectively. Our biggest motto here at Benchmark is that we never quit. And that's our commitment to you. And we also have that to our veterans. We are huge, one of the top leading financial companies for veterans and for veteran financing. So if there are any VA or veterans or current military people or spouses that are married to veterans, this is a great opportunity to chat, to show you all the options that we have for you. And we're able to go ahead and make that commitment for you. And the last thing that I want to say is that we close on time. We have so many buyers that like to go and explore other options, which you should, because it's always important to educate yourself. But one of the biggest things that sets us apart here at Benchmark is that as a direct lender, because we have full control of your process from beginning to end, we're able to close on time, which is huge when it comes to presenting your contract and getting your offer accepted. We've been fortunate enough that even though during this pandemic, when it's been very busy in our industry, on average, we are able to close within 21 to 25 days of a contract. That's, again, such a huge thing to know because it makes your contract more competitive when a seller is looking at a home that could close within 25 days versus 30 days or even 60 days that some financial institutions right now are giving. So what really matters when it comes to your payments or when it comes to your mortgage? These are the 7 key elements and descriptions that I
Karlene,
know. Yes.
I'm sorry, but we're not seeing your PowerPoint.
At all?
Yeah.
Okay, hold on one second. Let's see. Share screen. Okay, can you see it now?
Yeah, just go into slideshow mode.
Okay. All right.
Now you're good to go.
All right. Thank you, guys. I was wondering where everybody went, but I just figured it was just going, but it's all good. So what really matters when it comes to your to getting your pre-approval, okay? These are really the 7 elements, and these are the 7 points that most buyers want to talk about. The first thing that's super important to them is their monthly payment, okay? It's important to understand that monthly payments consist of 5 different areas: the principal and interest, which is what you're paying to the bank. Then you have your insurance and your taxes. Now, that area is going to vary depending on what kind of property you're looking for, whether it's a condo, a townhouse, a single family home. Not every home is made the same. Taxes and insurance will vary. Maybe that home has a newer roof, or maybe it has accordion shutters versus impact windows. All those things play a part in your monthly payment. So it's important to understand that when you get a pre-approval and you get an initial loan estimate, it is going to vary based off of the property that you see. Something else that also will work into your payment is going to be mortgage insurance. Mortgage insurance, depending on the options that you look, whether it's conventional financing, FHA financing, will vary depend on the program, okay? How do you get rid of that mortgage insurance? There are different options that we offer at Benchmark. The most standard way for people to know about not paying mortgage insurance and what, is to put 20% down. Now, mortgage insurance is pretty much kind of a guarantee that the buyer pays to the bank in the event that you decide to, get out of the country and go to Fiji and sell coconuts to tourists on there. And you say, I don't want to deal with this mortgage payment anymore. It is their guarantee that they're going to get their money back for the money that they lent us. Okay. Now, we also do offer some options here at Benchmark where, depending on how much you're looking to put down, where your credit is at, you could still avoid mortgage insurance putting down less than 20%. But again, that will be a case by case scenario, and we're able to provide, again, a different solution for you. Down payment and cash to close. 2 different items. A lot of times people confuse them to be one or the same, and it's not. Your down payment is pretty much the percentage that you're going to put down for the cost of your loan. Okay. So in this case, you would hear many times where you're hearing you would have to put only 3% of the down payment, or you would put down 5% of the down payment. It all is going to vary and depend on the type of program that you purchase. Okay. And it's also going to depend on how much you're willing to spend. Okay. So for instance, conventional financing for any first time home buyer can require a buyer to come in with that minimum of 3 to 5%. Let's say you have a home that you're looking at and it's at 300,000. 5% of 300,000 is 15 grand. That is what you will need for your down payment. Your cash to close is a different area where you factor in your third party fees, such as your title fees, your insurance policies. It will also have additional prepaids depending on when you close on the home. You have to have certain reserves for your taxes and insurance to open up the escrow. So those are an additional funds that you would need aside from your down payment. Okay. Cash to close, I always say conservatively, because I don't want to say scare, but I like to have a worst case scenario and then have buyers pleasantly surprised. I always say that you would probably need an additional 4% of that purchase price in order to factor in for your cash to close. Okay. So very quick math for you. Let's just look at that same scenario. 300,000 for a property. I'm asking for 5% down, right? And then I'm saying that you probably would need another 4%. So that's a total 9% of your total price of the home. Roughly, give or take, you would probably need about 27,000. Okay. Now, that will change depending on what kind of homes you will have, what property you're looking at. You're also going to have an opportunity to review down payment assistance programs options if you could qualify for them. You also have the opportunity for your agent to help with negotiating some of these fees. Maybe the seller is in a rush and they need to get rid of the property. They may be willing to contribute towards closing costs. I don't want you to get scared of those numbers, but I want you to understand what the difference is between a down payment versus your total cash to close. Okay. Interest rates. It's a great topic. I'm happy that Tony spoke about it. This last 11 months have been wild. And I will tell you that last year in January, your average interest rate was at 3.75. Currently, today, a year after, our average interest rate is at around 2.875. Okay. Now, interest rates are going to vary for everybody. Okay. What is a big driver of interest rate is credit. Higher your credit, the more competitive you can get with interest rates. But also, depending on which program you go after, whether it's an FHA program or a conventional program, that will also impact what the interest rate would be. The kind of property that you're purchasing, whether it's an investment home or a second home or a condo or a single family home, the type of property that you're buying will also impact what your interest rates will be. A loan estimate is something that you receive right as you get pre-approved. It's really exactly what it is, a loan estimate. It's an example of where your fees could be depending on what your financial picture is, okay? Once you go under contract and once your contract is approved, that is when we could go ahead and discuss truer numbers, real numbers. What I will say and what I always advise every buyer, especially in the pre-approval phase, is don't hang yourself up on interest rates or on what those loan estimates would be. Because again, not every property is the same. Interest rates change daily. Many things impact interest rates. For instance, this past week, they were on a volatile ride. And that is because we're getting closer to an inauguration. Okay. So there's a lot of things that can impact the way interest rates go. You will never see interest rate go from a 2.8 to a 17% in a week. That's not how this works. It's always a gradual uptick. Okay. And even then, I was born in 1985, so I could only hear stories that Tony tells me, but rates were back then at 18, 20% and they were buying. So we're still at a very, very exciting time to buy. Interest rates, just because you may hear that they go up to 3.5 or 3.8 or even 4 or 5%, that it is still a great, great interest rate. When I started in this industry back in 2003, the average interest rates were 7 to 8%, and our market was still high. I get a lot of questions now where it comes to the market value for homes. And, because of the economy and COVID, like, will that affect our market value and our interest rates? I wish I had a crystal ball. I probably wouldn't be here if I had a crystal ball and I knew, and I'm not an economist, but what I could tell you is that I don't foresee that happening in the state of Florida. If anything, we have a lot of potential buyers that are coming from out of state, which is going to hold our value for markets, which is great because, again, that's a great opportunity, a great investment that you're going to have within yourself at a very low interest rate still. Your closing disclosure is something that you will receive towards the end of your transaction. So about 3 days prior to your closing, you're pre-approved, you're under contract, you found your insurance agent, your home appraised, everything's great. Your closing disclosure will have your final real numbers of what the cost of the loan will be, okay? And those are really the numbers that you have to be ready for when it comes to your loan approval process. That's going to tell you exactly how much you need to have on hand, and then you could go from there. So, not going to go through all these things, but back to what I said with interest rates, there are tons of stuff that will affect an interest rate. And just to name a few on this list, you have about 30 different things that can impact your interest rate. But what I will tell you is that the biggest things that you're going to see is going to be your credit score, the type of property that you're looking to buy, your loan amount. Those are the big ones that will really can affect your interest rate, and those are pretty much the most common ones for you. So, why do rates change and when do they change? Okay. So, a mortgage-backed security is a type of asset backed security that is secured by a mortgage. Okay. These mortgage agencies, such as Fannie Mae or Freddie Mac, are the ones that, secure or package the loan and make sure that they're sellable. Okay. So what ends up happening is that, everyone thinks that stock markets is what it is. If the stock market is high, then the interest rates are going to go high. And it really is the bond market and the treasury yield that controls where the interest rates go. Okay. So the more that people invest in the bond market or the treasury, the lower the rate would be. When people start taking money out of this, 10-year security treasury bond and start investing it into the stock market, that's when your rates actually go up. Okay. So it's pretty much the stock market in reverse. So, I always like to share that because a lot of times people just, automatically assume that that's how the rates are driven, and it's actually driven by your treasury yield. So before you go finding a house and before you're going to go in that car and fall in love with that home that it's the dream home, you want to have your pre-approval ready. Okay. What do we do to start that pre-approval process? If you see the link below, which is tokarteam.flowify.com, we will go ahead and that will prompt you over to your credit application. Okay. Not many lenders do this. Benchmark is one of the few that offer this feature, but when you do your credit application, it is considered a soft inquiry initially, which means that we will not hit your credit as a hard inquiry. Okay. Once you submit your documents, once we verify the documents, that is when we will go ahead and run your credit. Why do we do that? Because we want to make sure that the file works. We want to make sure that we are putting you in the right program. We want to make sure that we don't have any hiccups. And only then is when we will go ahead and run your credit. Something to remember and something to keep in mind when it comes to your credit, and it's a lot of times where people are skeptical to go ahead and begin this transaction, is that per the CFPB, whenever a client or a consumer is purchasing a mortgage or purchasing a home or looking to get pre-approved, you have 30 days from your first initial hard inquiry to shop mortgage lenders. That means that you will only get hit once as a hard inquiry. So if, let's say today you went to Chase Bank, which is your bank where you have your accounts, and they give you a pre-approval and you're not too sure because you're iffy and you know that the process will take forever, and you want to go ahead and give us that second opinion. So long as it's within the 30 days of your first credit pull, when Benchmark reviews your mortgage or your credit, you will not get hit with a hard inquiry. Okay. It will not drop your credit. So I want to go ahead and make sure that you guys are aware of that. Once you submit your credit application, you submit your documents. The most important documents that we need to have on hand from you would be your W-2s for the last 2 years, your tax returns for the last 2 years, your bank statements for the last 2 months, where the money is. Okay. I don't want to see the hide account where you go and enjoy your Amazon gifts and shopping. I want to see where the funds are actually at. And I will need your pay stubs for the last 30 days. If you are a self-employed borrower, I would need to see your business returns as well as your personal returns. And we will also, because of COVID, we would need to see an up-to-date profit and loss statement to ensure that there is income stability within your business. Okay. Once we have this information, then we will go ahead and begin our loan approval process. The pre-approval process takes approximately 2 to 3 business days, depending on how intricate the file is. And we will go ahead and somebody on our team will ask you questions along the way, want to verify a couple of things. Once we do that verification, then we will go ahead and send out that pre-approval letter to your agent and to you, and we will be sending you a mortgage coach. A mortgage coach is a report that will have all your different options. It will break down your monthly payments. It will break down the cost of the loan, what the fees could potentially be, and then we will go from there. Okay. You could upload your documents through the loan portal once you submit your documentation. Okay. And once we get you pre-approved, we will do what we call a loan estimate for you depending on the property that you want. So for instance, if you were to go shopping with Lisette today, okay, and she sent you about 10 different properties over the course of the week, and you really like these 2 properties, but you want to make sure you could afford them, you can send us over that address and the purchase price, and we'll go ahead and create a customized loan estimate for that particular property. So that way, when you go look at it, you know exactly, you would have a better idea of how much that house will truly cost you when it comes to monthly payments and closing costs. Okay. So we went over the different types of how to handle the worry-free loan process. We've gotten you through your pre-approval letter, finding a home. Once you're executed and the loan your offer is accepted, you'll send that contract over to the Tokar team. We will go ahead and submit that file within 48 hours to the underwriter. The underwriter will then pretty much be the checks and balances. They're the people that make sure that everything that we did on the front end will make sense and make sure that the loan is sellable towards the end of the transaction to the correspondent bank that will be servicing it for you. Okay. You will be completing a home inspection with your agent. Okay. And we will order, from a lender's perspective, your appraisal. The appraisal and home inspection are 2 different things. Your home inspection is for you as a buyer to make sure that what you're purchasing is sound, it's safe, it's secure. If things need to be updated, such as electrical panels, or if there's some form of mold or paint lead of some sort, the home inspection will work and find that out for you. That report is going to help find you insurance. Okay. We work with a great insurance agent by the name of Jason Smith. He will be able to give you quotes along the way once you get to that point. And he's going to be able to make sure that everything's good when it comes to that your home could be insurable. An appraisal is what the bank orders. And what we want to make sure in the appraisal is that we want to make sure that the home is secure and safe to lend on. The bank is pretty much giving us hundreds of thousands of dollars for this home. So they want to make sure that what they're investing in is a good product. It's a good property. The roof isn't going to collapse in a week. And we want to make sure that it holds its value. If the seller is truly selling the home at $300,000, is it really worth $300,000? Is the market around the home comparable to that sales price? I was fortunate enough 6 years ago when I purchased my first home, I had more equity than when I purchased it. My home was at a purchase price of $194 and the appraisal came in at $209,000. So I actually closed with $9,000 of free money of equity towards me. Okay. And that does happen from time to time. So that's what the appraisal does. Okay. Title work is done through your title agent. We work with New World Title. They're awesome. Denise and her team is absolutely amazing. And their job is to ensure that there isn't any liens, that there isn't any code violations on your property. They are going to make sure that there isn't anybody that's going to come knocking on your door 3 months from now saying that Grandma Ethel left this home for me and now I'm the owner of it. That's what she's going to do. She's going to make sure that everything's works well with title. Okay. Once we have everything in line, the underwriter issues a conditional approval. A conditional approval is pretty much saying, okay, this loan can be sellable, but we just need to verify updated bank statements. We need to make sure that you're still working. We need to make sure that your insurance is up to par. So that will be it. And we work cohesively together to make sure that we get those documents from you. We send out your prior conditions. Our underwriter will issue a clear to close 10 days prior to your closing date. And then 3 days prior to your closing date, you will receive the final numbers for your home. As you do that, you will send that money to the title company after reviewing your closing disclosure. And then you're well on your way to the closing table and getting those keys. So at this point, I know I saw a lot of pings going on, but here's our information on Facebook. If you want to learn more about our company and who we are and how we do business, I personally have been doing this since 2003. My production partner Ralph has been doing this for 15 plus years as well too. So our team is dedicated and committed to providing you that customer service, that experience for you. We understand that when you're purchasing a home, you're not doing it Monday through Friday, 9 to 5. You will be going out nights, evenings, weekends. And again, it's just one of another advantage for you working with a direct lender, as where bigger banks, they are Monday through Friday, 9 to 5. So we want to be able to give that customer service for you, that comfortability. We want to make sure that you're confident in what you're doing. And we're here to answer questions along the way. In the chat, I did put in a code for you. If you type K Masse to 36260, you will get a text response with a link to our app. That app is where you could actually begin your credit application. You could also submit your documents through there. And it's a great app for you because you'll have different mortgage calculators. There's an affordability calculator there. If you're ready to begin the process, you can literally with your touch or your phone. And it also has up-to-date mortgage news and industry news as well as what the day-to-day interest rates are for you. So with that, I will stop sharing my screen. And there's a lot of questions, so I hope that everybody was able to answer it. Let's see here. Yes, it will be a soft hit to your credit. So if you go and you apply, now not every bank does that. Most banks are hard inquiries, but we understand the sensitivity around it. So we have it in our system where you're going to have a soft inquiry from the beginning. Once you submit all your documents and we verify, then we will go ahead and do a hard inquiry for you. Okay. Looks like all the other questions on here have been answered from Ralph, but I am open to any other questions. Is a co-borrower needed to get more favorable terms? It really is up to you. I have buyers where I have one right now where she is going on the mortgage and she did the application for herself and her parents. However, she wants to work backwards. So if we're able to determine that she could get approved without both parents or one parent, then we'll just take that person off the loan. Okay. No, you're not stuck with them. Again, the CFPB has total, they're working for the consumer. So if you have a bad experience with a lender and you're not happy or you're not satisfied with them, it's really going to be a comfortability for you. As I said, you don't want to go through a very stressful process and not have communication in line with what's happening throughout your pre-approval. Case in point, yesterday we closed the loan with an agent from Xtreme. The buyer was pre-approved with Quicken Loans. Halfway through the contract, they were not getting the answers that they were looking for. And this particular buyer was completely discouraged and was about to cancel their contract and just stop buying, period. The agent from Xtreme actually sent them over to us. They were very discouraged when they started with us. However, we were able to turn their experience around. They were also very hesitant when it comes to their credit being pulled again, but they gave us one shot and they were able to close, and they were able to close on time with their set contractual date. So it's really going to be a matter of what you're comfortable with. I will tell you, you don't want to have people on your side that aren't working for you.
Karlene, let me expand on that. Folks, this is the single largest purchase or investment that most of us ever make. And one of the things I am so passionate about is we do this for a living, and we only work with people that we know, like, and trust. I mean, this is what I stand for. I say, my goodness, everything is hinging on getting this money, getting this approved. And we are constantly having to bring people back from the brink because they went with ABC Mortgage Inc. and they spell Inc. INK. It's scary what's out there right now. So you owe it to yourself to go ahead and work with an established company. If my wife and I, having 8 years in this business and 200 agents, believe enough in a company like Benchmark to say they're our preferred company, it's for a reason. Now, no one is perfect. There's not a single situation or a single deal that's perfect, and there are situations where maybe a particular lender cannot help an individual and another lender can. But if you're going to start anywhere, you owe it to yourself to start with Benchmark. And even if you've had conversations, and even if you've gotten pre-approval through somebody else, doesn't it make sense to get a second opinion? Because when you get a second opinion, it's either going to make the first opinion look awesome and you're going to feel so much better about moving forward with that first one, or you're going to see, wow, look at the amount of money these guys are saving me. Because we've had that happen before with the Tokar team, where people have come with quotes from other mortgage entities that were raking them over the coals, and they were spending thousands upon thousands of dollars extra that they didn't need to. So that I just wanted to make sure that I plugged that, because I know it gets confusing and people don't know where to start.
Mhm.
But experience and performance goes a great deal. It means a great deal to us.
Right. I'm going to touch a little bit before we close out. I know we have a few minutes left about down payment assistance programs because I didn't really touch on them. Uh, but I want to preface this by saying, my mom taught me very early in life that nothing in this world is free. And that goes the same when it comes to down payment assistance programs. Down payment, we do offer some down payment assistance programs. We offer them through the counties. We are not city specific grant programs for a few reasons. But the main reason is that through the county, the state is the one that funds them. So they're never running out of money. City specific grants will go up to certain price points. However, they're lottery based and you're never guaranteed that that money's there. So it could take you months to find a house. And if you approve yourself for that city grant program in January, but you don't find your house till March, the chances of you having those funds reserved for you are very slim to none. Also, if a city decides to use those funds for building a park or helping their school during COVID, they could go ahead and utilize that money that's not regulated for them. Okay. Now, down payment assistance programs do have additional requirements. Typically, they are more stricter than getting regular financing through FHA or conventional financing. Your credit score has to be a 640 and above. Okay. The debt to income ratios have to be a little bit more stricter. So that could inhibit you from a bigger purchase price buying power. Um, and there's still fees associated with them. So it's not that they just give you the money towards all the money towards your down payment and closing. You still have to account for having some money in savings. They charge a 1% origination fee and they charge an application fee of $800. Okay. So for instance, if you're looking for a home at 300,000, you need to have $3,000 plus the additional 800. So it'd be at least 400 or $4,000 in savings that you have to have. Okay. So we will help qualify you for those type of programs. It's something that you want to say upfront when we are doing your analysis for you. I will tell you that 7 out of 10 times a buyer can come in with the mentality that they want a down payment assistance program. And once they compare the different options, they choose to go without the down payment assistance program. Okay. Down payment assistance programs also have occupancy restrictions. So there is an annual home, there is an income limit within the home that you cannot exceed. And you do have to stay in the property as a primary residence for a minimum of 10 years. If you choose to sell the property, refinance the property, you win the lottery and you pay it off, you have to pay off the grant as well. Okay. So those are kind of my 2 cents around it. It's always important to explore. We want to be able to give you your options, but I don't want you to get hung up on these down payment assistance programs because they sound good. And then once you see them on paper, they may not be the best solution for your program. Okay. Any other questions? You wanted to get the more information about the program that we offer. So the Homes for Heroes with Xtreme, Tony.
Yeah, I'll take that. What you need to do is just go ahead and contact the individual from Xtreme that invited you onto the class, the seminar, and they'll sit down with you and explain exactly what type of a rebate program it is. It is significant. To give you an example, we give you a 20% rebate on our side of the commission earned. So that's significant. Let's say, for example, Xtreme is earning, I'll just throw a number out there, $10,000 in commission on the transaction. Well, $2,000 is what would go back to the buyer, the borrower that qualifies. Now that's 2,000 real dollars that you can use now toward your closing costs and your prepays. So it is absolutely an amazing program. We are honored to offer it. And this is something that's strictly within Xtreme. I mean, I'm not saying other companies don't offer it, but this is not part of any kind of a national program or anything. This is one that we put into effect several months ago as our way of saying thank you in a very tangible way. So please, please make sure that you speak to the individual that invited you onto the call, and they will give you all the specifics.
Awesome. Some people asked if we were able to help them if they live in Georgia. Yes. Benchmark Mortgage is a national direct lender. We're located in 48 states. So if you are looking to purchase either outside of Florida, or if you're living in a different state and you want to go ahead and start the process in that area, send me over your information. I will connect you with a local loan officer in that area. We do service the entire state of Florida. I have literally gone to closings up in Cape Coral, in Jacksonville. Those were fun rides. There were day trips, but we do service all of Florida for you. So, you don't have to feel that you can only work with us if we're in, Broward, Miami-Dade. No. We have our team that works collectively through the entire state.
Okay.
Someone else also asked if a credit union would be different from working with a financial institution. I will tell you this. These are the three main differences between a broker versus a direct lender versus a bank. Banks, because they hold their loans within their portfolios, they will require additional what is called overlays or additional requirements. So, for instance, we will say that FHA can qualify a person with a minimum credit score of 580, so long as they meet other compensating factors. If you were to walk into one of the big banks or credit unions, they will tell you, no, if you want an FHA, you need to be at 640 in order to qualify. That is what it's called, an additional overlay. So, financial institutions and credit unions want to make sure that you fit a certain box because they're keeping the mortgage. They want to make sure that it's a viable mortgage. They don't want the risk of having somebody that may not fit into those categories.
Okay.
A mortgage broker is a little bit similar to a direct lender, but in the sense that they handle the process from pre-approval to contract. Once they lock in your interest rate with that bank, they lose total control of the process from contract to close. And that's probably the most crucial time when you need to make sure that your lender is available for you to answer any questions. Because if a file were to go left, if something changes, if you decide to go buy a car in the middle of a loan process, because people do that, they can't try to figure out a way to make the file work or fix it, and therefore your loan gets denied. And then you're now losing out on money, time, patience, and your stress will go through the roof. Okay. Now, as a direct lender, we handle the process from beginning to end. And because we have the capability of working with 30 to 40 different banks to help shop your interest rate, we can facilitate the entire process. It's not until 2 to 3 weeks after your closing where your loan will then get sold. So those are the big differences when it comes to your three types of ways to find and shop for a home. Um, I will tell you this. I came from the world of banking. When I bought my first home, I did not go with my bank that I was employed in, because I knew that their requirements were a lot more stricter than what I could do. We underwrite directly to the guidelines that are given to us by the agencies. So Fannie Mae, Freddie Mac, FHA, VA, USDA, they have specific requirements, they have specific guidelines. Benchmark would adhere to those guidelines. If you meet those parameters, the chances of you getting approved for a loan are very, very high.
Karlene, I'd like to answer a question that was posed regarding the HEROES program, how broad it is when it comes to healthcare, because it's such a broad. Yes, there are some restrictions. Our goal was to provide this program for frontline workers, individuals that are working in hospitals. They're meeting the people right there when they come in where they're sick. Now, there are exceptions, and what happens is, since this is our program, this is an Xtreme program, the final decision rests essentially with me. So whoever invited you on to the call, have a discussion with that agent, okay, with my agent, give them all the facts, what you do, what capacity you serve, how you're working with the community, and so on and so forth. And they're going to approach me. And my goal has always been that I want to be as open as I can and offer to as many people as possible. So if the argument is convincing enough, it will be extended. You ask if you service Nevada as well.
Yes, we have a loan. We have a few offices in Nevada.
Yeah. Now, what happens as far as the real estate side? No, we don't have agents. We're not licensed yet in Georgia or say Nevada. But what we can do is we can help you if meet someone, find someone, refer someone that is qualified to help you. One of my agents just found someone to refer to in California through our networks and everything. So to kind of help you find a skilled professional to help you in that area. Okay. So I think that's basically it, right? You're very welcome. I'm glad I was able to answer your question. Here's what's going to happen. I always like to end things with an action step, right? And the very first thing you want to do is talk to the individual that either invited you onto the call and say, look, I still have these questions, so on and so forth, and or reach out to Karlene or Ralph directly. Because even if you reach out to them directly and say, look, I was on this Zoom call, they know that you were there through Xtreme, and they're going to ask you, well, who specifically from Xtreme went ahead and invited you, so that everyone can get matched up. But this is kind of like a telethon. We have people standing by, okay? The phones are ready, okay? We're ready for the call. So it doesn't take too long to schedule an appointment to get the rest of the process going. But look, if it were me, I'd want to know. I want to know, could I buy now? And as Karlene mentioned, there are a decent number of folks that are not ready to buy right now, but wouldn't it be great to know what you would need to take care of or remedy or put into place so that you could buy? And this is what happens when we work together towards a goal. And it could be that you are ready to go right now, or it might be 3 or 6 months away. But having that information is priceless, so you could be working towards your goals. Okay. Well, programs for students. I'm not sure what you mean by students. What program in terms of from a lender standpoint? I don't know. I don't know what that means. Maybe they can ask that question, expand a little bit more. I would imagine that I can answer from an Xtreme standpoint. If someone is a student, it doesn't come under the HEROES program, so it doesn't give them a rebate. And a student is going to have to be working in order to be able to qualify for a loan. So I don't know of many students that are going to be in a position to be eligible to qualify for a loan.
Right. I will tell you from a lending standpoint, there isn't a specific student program out there. However, let's say that you're about to finish your studies and you have a gap of 3 to 6 months where you're looking to find a job in your industry. Okay. on average, you need a 2-year income employment history. Now, there is an exception or a guideline where as long as you're able to provide us with your tax, or not your tax transcripts, your college transcripts. You graduated in January. You started in the same field in your career in April. That job gap will not affect you because you were looking for a job and we have your transcripts to show. So you wouldn't need that 2-year history in order to qualify for a home. Okay. You don't have to wait 2 years to have income to purchase. So I hope that can help answer anything. Would a bankruptcy affect buying a home? It really just depends on the date of discharge of your bankruptcy. Okay. Each agency has a specific timeline depending on what chapter you filed. And we go based off of the date of discharge, not when the proceedings occurred or started. Okay. So whenever the date of discharge occurred, typically for FHA, it's 3 years after that. If it is conventional, I want to say it's 4 years. I need to confirm though, because they have been changing constantly with COVID, but we could definitely one off your situation and have more of an in-depth conversation to find out who, what, when, where. Now, there are some programs out there, and Tony could touch up a little bit about it. I know we're about to less than a minute left, that are called non-traditional loans, where if you are willing to kind of take the hit and get a higher interest rate and put a little bit more money down, there are loans that don't fall necessarily into the conventional platform. They fall in what is called a non-traditional platform, where if you have a bankruptcy that's less than 12 months, or your credit is not okay, there are programs out there that, again, we will go ahead and look at case by case. Interest rates are higher, down payments are higher, but it gets you in the door. So
Yeah, absolutely. So the first step would be if Benchmark, after looking at all of the factors, says, you know what, unfortunately, based on this or this, they cannot qualify right now for a traditional mortgage. We can do what is called a non-qualifying mortgage. And I have a division that handles that. And that's a plan B, because there's just certain individuals that, based on their situation, are not able to provide all of the requirements, but are still in a position where they can't afford a home. We don't give up until we look through and see if we can somehow get them through one of our non-QM mortgages. So first step is talk with Karlene and Ralph at Benchmark. And if they feel, no, there's no way that we can help them on a traditional sense, then we'll go to a plan B. Why do we do this, folks? In the interest of just not keeping people here, there's still additional questions that are there, but what you can do is Ralph and Karlene have both posted, and if you guys could just post one more time your contact information, can continue the conversation. Continue the conversation there. Now, this has been recorded, and the individual that invited you onto the call will have access to the recording and the password for it. So seek them out, because you'll be able to play this back over and over again. And even better, you'll be able to share it with maybe a friend, family member, or coworker that's in a similar position, and maybe we can be a service to them as well. It has certainly been an honor and a privilege to be with you here today. Thank you for taking time out of your schedules. Karlene and Ralph, you guys are awesome, especially you, Karlene. You did an amazing job as always. Thank you for being there. I want to thank my team members that did such a phenomenal job of reaching out to the community and getting as many people here. But ultimately, all the thanks goes to you for taking the initiative, the first step on putting yourself on the road to home ownership. We are honored and privileged to be a part of that journey with you. Have a fantastic day, and we're looking forward to working with you in the near future. Take care, everyone. Bye-bye.
take care. Thank you.